Welcome to Candlelight, where price is a mechanical function. In this video, I'm going to be going over price gaps. What are they? What's the mechanics behind them? And why do they act like price magnets? They're essentially pockets of air. That's all it is. Because price hasn't traded through that level, there's no pressure there. And by pressure, I mean there are no demand or supply zones. There's no volume right there. So I love this phrase. Water doesn't climb. Water goes to the lowest. It follows gravity. It goes to the lowest pressure point. Price does the exact same thing. Price gaps have nothing there. Again, pockets of air. So price tends to go to areas of the least amount of pressure. Now, the example I'm going to be going over is Citigroup, on obviously a stock. But the reason, out of all the markets, stocks have the most price gaps because there's an open and a close, and sometimes you get a price gap overnight or over the weekend. So stocks, out of all asset classes, have the most amount of price gaps, which is why we're going to be going over stocks. But this also happens in futures, currencies, any other market. It's just most prevalent in stocks. Now, price gaps and the mechanics of price movement, and all price movement applies to all markets. Supply and demand is what moves all markets. So what we're going to learn here, you can apply it to crypto, currencies, futures, options, doesn't matter. Price is a mechanical function, so it always moves the exact same way it doesn't move the exact same way, but it follows the exact same rules. So let's get into it. All right, this is a 5-minute chart of Citigroup, where every candlestick represents 5 minutes. And over this, probably a week, you have 3 fantastic examples of how price behaves with price gaps. I want to go over this one right here. I'm going to make it a bit bigger. Well, let's make it a bit, there we go. So price rallies from here and then closes at the end of the day and then opens right here. But you have a nice, huge gap to the upside. Gaps work like candles. When there's a gap, just consider it, if it's to the upside, one very large green candle. And much like these two ballistic moves, as I've said before on previous videos, ballistic moves like this that have no demand or supply zones, right? For example, like this rally right here has rally, base, rally, base, rally, base, rally. Those are demand zones right here, the basing and then ballistic movement out. That's what you want to see. That's sustainable. Anytime you have pockets of air, which is just either price gap or one solid ERC, expanded range candle. Let's make this big, like this one and this move here. Those are unsustainable, and since there's no levels in it, price often retraces. So price fell from up here and then was able to rally all the way back to the origin of the move. That's where supply is. Because there's no pressure, there's no supply zone. In other words, there are no levels. You get a full retracement. Same thing here. It rallies really hard. Notice how it's going to retrace all the way back to the origin. It's easy for it to come back to it. Let me just paint it here. After price rallies, it came all the way back because there's nothing stopping it. There are no levels in between stopping price. So that is exactly what a price gap is. Consider it, or just treat it exactly as you would as one solid candle. So right here, one solid green candle. This is why price gaps often, or I was going to say often always, but very often get filled. There's no pressure here, so this is where price is going to want to go. And the origin of price gaps is a really good area to trade. Let me just there we go. Right there, that's a good demand zone. Origin of a ballistic move, the origin is where you want to go to. Much like the origin of this fall here, that's where supply was. That's where you want to be shorting, right? Because that's where supply is the origin of a large move. Gaps, exact same way. So wait for price to fill the gap down here, and the origin of that gap, that's where the imbalance is. In this case, since it was to the upside, it's demand. Let's go over the other 2 examples. Down here or over here, price falls, ballistic movement, that's a gap, there's no pressure, so one solid red candle since it was to the downside. And notice how that space got filled, because it's really easy for price to just absolutely plow through that area, or this area, let me highlight it again, plow through that area because there's nothing stopping it. And the origin of that move, hold on a second, the origin of the move, that's where supply is, since it's to the downside. Price is just following areas of least amount of resistance, and then when it meets the origin of a move, that's where the imbalance is, and then falls. But the point is, price gaps often get filled. Another example, right here, this price gap, ballistic movement all the way down, so it's easy for price to retrace all the way to the origin of that move. And sure enough, I think it kind of got pierced a bit, but for the sake of explanation, price was able to fill the gap. It retraced that whole move, and it filled this gap in price. Same thing right here. Let's just do last example. Price closed here. It rallied all the way up here. That was a gap. And notice how easy it was for price to just fill the gap and continue going. And the gap, in case you can't see it, is right here all the way to the open, which was right there. But notice how it didn't even need supply zones or any kind of drop, base, drop, base, drop. It just fell like it was falling through a vacuum all the way until here. That's where you start getting supply zones, because price is having to chew away at demand right here to continue the downtrend. But notice the difference in price action, where if it's just following through a vacuum, in other words, a pocket of air, you get no structure because it's just free falling. When you start getting into demand and the trend is continuing, you're having to purchase buy orders and continue to fall, or you're having to sell into buy orders and continue to fall. So I hope that was helpful. Price gaps are like price magnets. Price wants to fill areas of no pressure whatsoever because it's easy to do so. There's no pressure there, so water goes downhill. It doesn't climb. So I hope this was helpful. I'll see you guys in the next one. Take it easy.